Hey y'all, and welcome back to Dominique Young Law PC videos. And so this video is going to be about how you are to report the income that you pay to any employee or independent contractor. So every business has employees, whether it's you, the owner of the employee. You could be the only employee for your business. That happens. And you may also be the only employee, however, you have independent contractors as well. So here's the difference between what is considered an employee and what's considered an independent contractor. So in Florida, the Florida case law has stated that the primary test for employee-employer relationship is the exercise of a right to exercise discretion and control by the employer over the employee. And that was pretty important because the case made sure to say that, another employer can't exercise control over another person's employee. That would not meet the requirements of, the employer-employee relationship. So, and then in Georgia, case law says that it is the individual performing any service who is not free from control and discretion in connection with the performance of the service. So basically, if you can't decide what you will and will not do in that position with your employer, you are considered an employee, right? So if your employer is directing how something is supposed to get done at that job, or how long it's supposed to take, or how much time you're supposed to take on that specific project, then you are more than likely an employee. Okay? And so an independent contractor is different. An independent contractor is essentially, in Florida, is any person who's contracted to do something for another, but who are not servants of the work undertaken. So basically, that person is not dictating how the work gets done. They just say, I need this to get done, and I want you to do it, and I'm going to pay you to do it. In Georgia, they say that if you have a written contract as an independent contractor, and the person qualifies as such. So basically, if someone has contracted with you to do some work, then you are an independent contractor. Now that's different from an employment agreement. An independent contractor is someone separate from the company that is doing work that you asked them to do, and you contracted. You gave them a contract, and you both agreed to it, and you signed it, and they said they were going to do the work. So they are an independent contractor. Now, here's the difference between the two. In Florida, the court said that the decisive question is being who has the right to direct what shall be done and when and how it shall be done. In Georgia, the test is whether the employer assumed the right to control the time, manner, and method of executing the work as distinguished from the right merely to require certain definite results in conformity with the contract. Right? So it's basically what I said before in both states. If the employer can direct when and how your work is to be done for their business, then you are an employee. If the employer just gives you a job and says get it done, and you have contracted as to how much you will pay that person and the deadline for that job to get done, then you are an independent contractor. So that would be the difference between the two, essentially. So why am I informing you about the difference between an employer and an independent contractor? And it's because all in the way that you pay that individual and the way that you report what you paid to that individual to the IRS, because you got to do it, right? So if you are an independent contractor, or if you have hired an independent contractor to take some of the load off of whatever it is that you are doing, you still have to report that to the IRS, okay? So what you would do is when you essentially contract with that individual to complete work for your business, you would have them complete a W-9. And the W-9 will give you all the information that you need in January of the next year when you are making this reporting to the IRS. So essentially, they fill out the W-9 and it's available on irs.gov. They fill out the W-9 and then you pay them according to the contract that you have with that independent contractor. And then in January, you use the information on the W-9 to complete the 1099 NEC for that independent contractor. And then you will submit that 1099 NEC to the IRS. And that will let the IRS know how much that business made from you and how much they should have reported to the IRS, right? Okay. And then you would just include that as well on your taxes. Now, employees are more work. As an employer, you have to report what you have paid that employee to the IRS because they're going to use that when they fill out their personal income taxes, right? And you, as the employee for your business, because you may be the only employee for your business, you have to report to the IRS what you have earned from your business, right? And the way that you would do that is by submitting the reporting to the IRS, and then you will complete your personal income taxes just like everyone else at the end of the year, okay? So because it is a statute that you have to withhold taxes, you have to do withholding taxes for any money that is earned from a business for work that is done. So you're supposed to do it. So go ahead and do it. I'm going to tell you what you need to do in order to make sure you do it and that you're in compliance for either you yourself as the only employee for your business or for any employees that you may have. Okay? So first, your business needs to have an EIN. And you would get that from the irs.gov. And that is basically an employer identification number. So go ahead and get an EIN so that you can make your reportings to the IRS. Then you need to create a State Department of Revenue account for any state in which your employee or in which you actually reside, because you may reside in a different state than where your actual business is located. And so you pay taxes, you pay the state taxes where you actually reside, not necessarily where you work, because you could work and reside in the same place. However, you just need to make the account for your business in the state where your employee or where you reside. Okay, now there are some exceptions to this. There are some states where they do not file state income taxes. Therefore, you do not have a state withholding. Those states include Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, and Wyoming. They don't have state income tax, so they wouldn't have state withholding. Therefore, you don't have to have a State Department of Revenue account for your business. Every other state, you got to do it, right? So, and then when you are compiling the information for yourself, or when you are onboarding your employee, you need to have your employee complete a W-4. And the W-4 is essentially what you did for your independent contractor, which would have been a W-9. The W-4 gives you the information that you need when you are compiling their W-2s in January or at the end of the year in December prior to January. Okay, and Form W-4 is the employee's withholding certificate. And basically that is the employee telling you how much to withhold from their taxes based off of how they file, because everybody doesn't file the same. Some people file single, some people file joint married, some people file married filing single, some people file head of household. You don't know what they are, so you're not supposed to guess. You're supposed to let that employee tell you. And then it also goes into, how much they want withheld from their paycheck. So you need the W-4 to be able to do all that. And if they live in a state where you have to withhold state income taxes or state withholding taxes, then you will complete the form that is respective to that state. Okay? Now, and then whenever you go to pay that employee, you would remove from their gross amount, which is the total amount that you would normally pay them. You take out that portion of taxes that they essentially owe to the federal government or the state government as well, and you put it in a separate account, and you hold on to it until it's time for you to remit those taxes to the IRS or to the State Department of Revenue, right? And so that's essentially how you do it. And so you're like, well, Dominique, how am I supposed to know how much to withhold? I mean, it's a really serious calculation that I don't have the time to do for every single employee, or I don't want to do, for myself. Easy peasy. So I go to paycheckcity.com, and it has a salary calculator and an hourly calculator, and it allows you to choose the applicable state as well. And so you put in the information and you hit the calculate button, and it tells you the gross amount that you originally put in. It shows you how much you should be withholding for federal taxes, for Medicare taxes, and for Social Security taxes. And if you live in a state that has state income tax, then it will show you how much to withhold for state income taxes as well. And then at the last line of it is the net pay that you are supposed to pay yourself or that employee, right? And so that is the net salary is what you would pay your employee, not the gross. So you would write a check or do direct deposit for yourself or for your employee for the net amount, and then the amount that is shown for federal taxes, Medicare, Social Security, and if applicable, state taxes, you put that in your tax account so that you can pay those taxes when they are due, right? And so, so that is what you would use essentially to make sure that you know how much to actually withhold from your employee or for yourself, if you are the only employee, to pay to the government. Okay? And then every quarter, because most businesses, you are going to remit your withholding taxes on the quarter. And a quarter would be every 3 months. So January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. And then October, November, December is the fourth quarter. And so at the next month following those 3 quarters, that's when you will remit those taxes to the government. And it shouldn't be a problem when you remit those taxes, because you have those funds in a separate account specifically for paying taxes. Do not use that money that you withheld from your employee for something else, because that money is not yours. That money is for taxes, right? So when you go to file your quarterly withholding return, and for the federal remittance, you would use a Form 941, which is an employer's quarterly federal tax return. Okay, and so what you do is you go into it, make sure you check off which quarter it's for, whether it's first quarter, second quarter, third quarter, fourth quarter. Make sure you check off the right one, complete in all the information, and then it has the boxes for you to be able to calculate the amount of taxes that you are actually supposed to pay, because technically your employee pays half and then the business pays the other half for certain taxes. So you have half of it in your tax account, and then you as a business would have to pay the other half for, I think it's for Medicare and then for Social Security, right? And then remember, you are an employee, so you're doing that for yourself as well. And it's good because that means that when you retire or when you get of age to receive Social Security, you have been placing money into your Social Security account. And when it comes time for you to use Medicare, if you choose to use Medicare, then that money has been put away for you, so that when it's time for you to use it, you use it, and you've actually been putting that money away to be used. Then, if your employee lives in a state where they are supposed to remit state withholding taxes, you will go to your State Department of Revenue website for that employee, and then you will fill out that state's annual return, and then you will use those state taxes that you withheld and place in a separate tax account. You would use that money to pay those taxes to the State Department of Revenue. Okay? Now, you fill those out every quarter, and it's not exactly as long as as it is coming across to be. It does take time. However, it's something that you need to do every quarter because one, you are an employee for your business, and two, you may have employees, right? And then the next step, every year you report to the IRS what you paid yourself as an employee or what you paid any of the employees that are employees of your business, right? And so this is how you do it. What you do is you would basically draft a W-2, and don't make up your own. Go to the irs.gov and get the form to complete the W-2 for each and every employee, right? That or FormStacks is a great online option to complete W-2s and file them with the IRS, and they'll also mail them to your employee if you want to, and you can use that service every year. And you can also use it for your independent contractors when you are submitting your 1099 NEC. They'll file it with the IRS for you. They'll let you know that it has been filed, and you don't have to worry about the IRS mailing you the W-3 form in the mail, because the ones online, you can't print them. So they got to mail them to you. Now, so every year in January, you create and file the W-2s for your employee. And on the W-2 for your employee, it'll show the salary that you paid them or the amount of money that you paid them throughout the whole year. And it will also show how much you took out for federal taxes, Medicare taxes, and Social Security taxes. And then at the bottom of the W-2, you will enter your business's State Department of Revenue number, account number, the state for the employee, and then the wages that you paid that employee for the year. And then it will also show how much you withheld in state income taxes. And then once you've completed all that, you mail a copy or you file a copy with the IRS, and you send a copy to your employee. Why do you do that? Because your employee, you or anyone else that you hire, has to file your personal income taxes. And depending on how you have your entity set up, your business may be a totally separate entity than you, right? So you will have your business's income taxes and you will have your personal income taxes. And remember, your employee has to file income taxes as well. So you need to make sure that you complete those W-2s for yourself and for your employees so that they can file their personal income taxes, right? And so what you also have to remember with the W, and so then once you've done a W-2 for every employee, then you have to do a W-3. And a W-3 is essentially a combination of all the salaries that you have paid, all the taxes that your business has paid, and you submit that to the Social Security Administration. So essentially it goes to the IRS and it goes to the Social Security Administration because they want to know how much you withheld and how much you paid during the year for that particular employee. So you would submit a copy of every single employee's W-2 along with one copy of the W-3, and you would file that. However, if you use a software program like FormStacks, it'll do all that for you and make sure that it goes to the right place. Now, so essentially what I explained to you, you're like, Dominique, this is going to take way too much time. I don't feel like figuring this out, and this is just going to take way too much time. Completely understand. And there are definitely software programs online that you can use for payroll. They include like QuickBooks Payroll, ADP, Gusto, Sure Payroll, FreshBooks, Rippling, Wave. You can use all of those programs to do your payroll for you. They will pay your employees, they will take out the taxes, calculate them for you, and then on the quarter and at the year, they'll go ahead and submit those to you. However, if you're just like, I've looked at the prices for these and it's just not in the budget right now, Well, the steps that I gave you earlier are what you can use to be in compliant, because you do not want to pay an employee and then come tax time, they have all these taxes to pay that they weren't expecting to pay because they were requiring you to remit those taxes to the government. And even for yourself, you don't want to get to the end of the year and have to pay all these taxes to the IRS, and you could have done all that during the year, little by little. So it's best to just, take the time during the year when it's required, and go ahead and do it the right way. That, or you can hire a bookkeeper as an independent contractor. Just make sure that they fill out the W-9 and that you submit a 1099 NEC to the IRS in January of every year. So once again, if you ever have any questions in regards to taxes or intellectual property, specifically trademarks or copyrights, or if you just have some questions about the business laws in regards to running a business in Florida or Georgia, the office number is 866-823-9572. Again, the office number is 866-823-9572. You can also go to the firm's website, and if you go in the upper right-hand corner, you can click Schedule a Consultation, and then you would be able to work with me in order to see what we can do to assist you with your business, with the operation of business as it regards to laws. And so the firm's website is www.dominiqueyounglaw.com. Again, that is www.dominiqueyounglaw.com. Thank you.